So hi and welcome to the Data Explorers Market Update. I'm Will Duff-Gordon. So last week when we ran our weekly list of stocks showing short interest or stock on loan at a 52-week high, came across a company I'd never heard of before called Illumina. And forgive the pun, that's rather illuminated me to a rather interesting situation going on in the sort of genome research area. These are the companies who are at the forefront of mapping the human genome, gene sequencing, to help us try and understand why these diseases are coming and what's happening to human cells. Really fascinating area. And so why would Illumina have 21% of its shares being short, we wondered. And then we looked and we saw that they weren't the only one, and other companies like them are also quite heavily shorted. So take a little step back. Essentially, in the same way that mobile phone and computer companies have to sort of build themselves around an operating system, so do the sort of the universities and the genome researchers have to buy a platform over which to do their genome sequencing, etc. And there are basically three main players who offer those platforms, and they are Illumina, Life Technologies, and Pacific Biosciences. And Illumina are leading the way, so it's a surprise they're so shorted. But if you look on the other side of the coin, institutional investors have owned a massive 32% of this company, which is a 6-month high. They bought another 5% of the company since November. So you've definitely got a sort of a Marmite, a love-hate thing going on here. The long-only patient investors very much like Illumina. They also very much like Life Technologies, which has low short interest, but a bit of a spike recently. But it has 29% of its shares held by funds who lend. Pacific Biosciences IPO'd in November, and it's pretty heavily shorted at 4.5%, which is kind of as much as you can borrow. So quite interesting. So some big shorts in that sector, and also some big institutional ownership, particularly in Illumina and Life Technologies. Now, interestingly, if you looked at some Harvard professor legend recently said that finding why cells mutate when cancer hits will be like trying to find a golf ball on Mount Everest. But clearly people like Illumina and Life Technologies are going to give it a good go. And investors are kind of split as to which way to go. There are two other companies worth looking at in this area. One's called Sequenom and one's called Human Genome Sciences. Both, again, pretty heavily shorted. Sequenom 15% short, and yet funds who lend, the sort of our proxy for the long-only guys, they're at a 6-month high in terms of how much Sequenom they own. And then Human Genome Sciences, again, 10% short, which is very high against an index average of about 2, but institutional owners happy to buy more and more of this company. So that's kind of as much as I'm going to say. There's a report at dataexplorers.com. Both types of investor could be right. It could be a bit of a problem in the short term for these firms, particularly as government funding and these universities who are going to be paying these companies for their tools are clearly reliant upon funding that's going to be pretty tricky to come right now as governments cut back and freeze budgets, and charity fundraising is tough. But in the long term they could be fine, and that's what the institutional investors are there for. Thank you for watching, and I look forward to seeing you again tomorrow.